Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, August the 12th. The year's 2024. Let's talk trading. Weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And let me give you the friendly reminder that you should not lose any more on any one single trade than you are willing to lose. It's called risk management. And also, join me in wishing Walmall a happy birthday. I spoke with him earlier. He made 2 trades, made his core, and he's going to go and enjoy the rest of the day. And that's something that we as traders sometimes forget because we get so wrapped up in trading that, there's life outside of trading. So keep that in mind. And as we get back to trading, we see the dashboard shows us that the pound yen failed to fill the weekly open gap. Right now, the pound dollar is between 9 and 10 pips above the weekly open, 12 off the high, 23 off the low. If we look out at the monthly, we are 84 pips below that monthly open, 94 off the high, and 105 off the low. And you can see we're right there in the middle of that body. We're putting in the opening range for the week. As you can see, we popped above the opening range for the year at 2760. That's 1.2760 for those of you who aren't familiar with us dropping the 1 point. And we are within the opening range of the month. For the year, we're 58 pips above now 57 pips above the weekly open, 275 off the high, and 470 off the low. We had an inside bar 3 days ago, and we had an inside bar 7 months ago, and we are above both of the highs of those ranges. In fact, we just crossed over that inside bar high for the month, sitting at 2758. And you can see here on this daily chart, we are inside the upper wick zone of Friday's candle. Only 35 pip range on the day. As you can see, the yen pairs, they seem to all be over 100 pips in range. Dollar yen is 115 pips above the weekly open. It makes me want to start trading the yen again. You can see we're crossing through the buy zone here using the H1 candles on the pound dollar. And somebody was asking me, they sent me a message about how they were trading the buy zone and they were making a couple of pips. And then I guess what happened was they had some trades that turned against them and they wiped out a bunch of profit. And I was telling them, you put a stop loss on the chart, it doesn't mean that you can't exit before it hits the stop loss, minimize your losses. Were you really willing to give back all that money on a single trade? I mean, because the distance between here and here, if I remember correctly, 16 pips. So if you're only taking 2 or 3 pips, but you give back 16, you're really working against yourself. Sometimes you got to think about the money rather than the pips. And so if you're up a certain amount, you might only want to give a certain amount back. Depends on your plan. I mean, I bought some crypto. It doubled the account and then some, but that wasn't the reason I bought the crypto. I'm thinking more like a 5-banger or 10-banger. I left it in there, and now it's about up, maybe barely 50%, if that. So, but I'm just going to leave it there, and maybe I get the 10-banger or 5-banger, maybe I don't. But and it's really tough because, being a day trader here, you're living and dying by every tick, right? So it's kind of tough to do that, sit there and watch that happen. Rat zone, range is too low. Not even look at it. Bambino Flex said to go long. Price near the pivot, bias is long, and as you can see here, we got near the pivot, didn't quite touch it, but popped back up, and we're going away, approaching the previous day's high here, 27, call it 74. Now that's interesting. It did take out the pivot. Do I have a different? This is 27.525. What's this pivot say? Oh, I know. I forgot. These are H4 candles. It took out the pivot on the open right there. Came down, even though who knows that this could have just been the open gap. I don't know if the ask ever got down that low or not. But you can see here when it tried to get down here before, didn't quite make it, but reversed off of that level. Weekly pivot, we missed the weekly pivot barely by 0.4. Close enough for hand grenades though, right? And we have taken out the monthly pivot. Once again, we are in the upper wick zone of the previous day, trading day's candle. And it seems like for those of you who like to trade the wicks, you can see here prices in all these wicks, meaning the sellers push price back from this, and we'll just have to wait and see what happens. Only 35 pip range, again, nothing to really be concerned ourselves with this time, that's for sure. Okay, looking at simple price action, we're approaching previous day's high once again. Notice the number of outside bars here on M30. Notice, looks like we, I don't know if we covered that candle or not. Looks like it might have opened, might have gapped up a hair. Okay, we put in another 3-ball, lower 3-ball this time. Price is reversing. You can see here it reversed off of a 3-ball 313 bars ago. So once again, if we see, we were looking at that M30, and it was up here, and I was talking about it was all those wicks. That's what happens sometimes. Just remember, these videos are for educational purposes only, and your results may differ from mine. And once again, looking at those squigglies and looking at the imbalances, I made the lines a little bit thicker and changed the color so they didn't get washed out. But you can see here all of the EMAs from H1 down to M1 are saying to look for longs. But the problem I have with this is, you can see right here, this didn't happen. You didn't get that signal till right here. So there was all this opportunity using wick zones and turn trades or flip-flop boxes. And for those of you who might be tuning in, what is a turn trade? It's something I realized, I don't know how many years into trading, but it was so obvious that I don't know why anybody else never stated it. At least I haven't come across it in my reading and studying and research. But at the bottom, for there to be a bottom, there's going to be a bearish candle followed by a bullish candle. That's when price turns around. It always happens. You're not going to get a price turn. Your price is not going to turn around unless that happens. And so, and you see at the top, it's just the opposite. You get a bull candle followed by a bear candle, and then price turns. Now it can turn, back and forth like here. But the thing is, when you're at these, the high at the day or the low of the day, that's what's going to happen. Now, yes, it could make a new higher high or a new lower low later, but that's what you look for. At least that's what I look for. So I'm not sure here. It came down, closed above this line, and it's starting to turn again. You see? So right there you had a flip-flop box, a price turn. But this is a price turn at a localized bottom. And this is the that wick zone indicator I was telling you about and I've been working on, and you can see what happened down here. You had a price turn, another price turn, and then here, same thing. And this is just painting. It finds the lowest low, paints the wick, finds the highest high, paints the wick, and then price usually will return in this area, return to the area, and if it doesn't push through, then it goes the other way. And so this is the part of Walmall's edge trading idea combined with a couple other ideas, but it's just basically using a wick zone of the candles. So, fellow traders, I hope you all had a fun and safe weekend. And I'm going to wish you a profitable week this week. And when you're trading, I always want you to remember and never forget, it's not what you trade, it's how you trade it. So go out there and train the banks. This is the Rumpled One, over and out.